This is FinTech Insider News. This week, Shopify launches Shopify Finance to help out businesses. Moniepoint becomes Africa's newest FinTech unicorn, and they're here to tell us more. And Jamie Dimon, shy and unassuming as ever, has said it's time to fight back against the regulators. We'll be discussing all of this and more on today's show, so don't go anywhere.
When you need mealtime inspiration, it's worth shopping Kroger for thousands of appetizing ingredients that inspire countless mouth-watering meals. And no matter what tasty choice you make, you'll enjoy our everyday low prices. Plus, extra ways to save, like digital coupons worth over $600 each week and up to $1 off per gallon at the pump with points. So you can get big flavors and big savings. Kroger, fresh for everyone. Fuel restrictions apply.
Hello and welcome to episode 911 of FinTech Insider. I'm Kate Moody, Customer Strategy Director here at 11FS. I'm joined this week on FinTech Insider News by some brilliant guests who are here to break down the biggest stories from the past week in FinTech and financial services. First up, making their FinTech Insider debut, we have Vikram Anreddy, Head of Product Financial Services at Shopify. Welcome to the show, Vikram. You've got some pretty exciting news, which I'm excited to pick your brains on in a second. But for anyone who's been living under a rock, can you tell us a little bit about Shopify and your role there, please?
Thank you, Kate. And really excited to be here. I think for all your listeners, I'm sure a ton of them know about Shopify. Shopify helps entrepreneurs build commerce businesses on our platform. We power 10% of commerce in the US, second only to Amazon. So it's a big platform. We have millions of entrepreneurs building their business right now at Shopify. And we at Shopify are on a relentless mission to break down the barriers to commerce entrepreneurship. And that is what we do day in and day out. There is tons of friction that entrepreneurs face when they build a business, and we want to break that friction down. And money is one of those areas of friction for our merchants. Managing money well is really hard with traditional banks. And that is what we are trying to break the friction down in with the work that me and my team does. I support the financial services product area. We are building a suite of powerful tools to help our merchants manage money so that they have the best shot at business growth and success. And I'm really excited to talk about Shopify Finance and what we've launched recently.
Yeah, fantastic. Always like stalking what you guys are doing. So yeah, very, very personally excited to pick your brains as well. So thank you for taking the time to join us. Next up, it's another FinTech Insider debut for Felix, CTO and co-founder of Moniepoint. Felix, you've also got exciting news. So again, going to pick your brains as well. But would you mind telling our listeners a little bit about yourself and about Moniepoint, please?
Yeah, thank you so much, Kate, for having me. So my name is Felix, the co-founder and CTO of Moniepoint. Moniepoint is a business banking platform in Nigeria. So our goal is quite simple. We want to build a platform that would offer our customers everything they need to run their business. So we basically want to give you a one-stop shop where if you need to accept payment as a business, we want to give you that. If you want a loan, we want to give you that. If you want tools like inventory, accounting, bookkeeping, things that you would need to run your business, we want to also offer you that. For me, as the CTO, I basically handle engineering and infrastructure. So the infrastructure that powers Moniepoint business, those are on my shoulders.
Awesome. Well, thank you very much for taking the time out to join us, and looking forward to getting your take on the news as we go through. And last, but absolutely not least, it's a very warm welcome back to the podcast for Joanne Barefoot, CEO and co-founder of Alliance for Innovative Regulation. Always great to have you on the show, Joanne. How are things going? What are you up to at the moment?
Yeah, it's wonderful to be back, Kate. Thank you for having me. Yeah, AIR is a nonprofit organization. We work all around the world on almost every continent, including we're doing some interesting work in Africa right now. And we are focused on helping the regulatory system keep pace with technology change, which means we're very busy. So we've got a lot of initiatives going on, some of it working directly with regulators to help them modernize, and some working on problems that interest them all around the world.
Yeah, I was going to say, I suspect that is a full-on job. So thank you also for taking the time and looking forward to picking your brain as well. So we have a pretty awesome panel. I'm very excited. Let's get on to the news. So our top story this week is taken from payments, but covered in lots of different places, and that is Shopify Finance streamlines merchant payments, bill pay, and credit. Shopify has launched Shopify Finance, a central hub for all its financial solutions, aiming to simplify funding and support for merchants beyond traditional banks. Merchants can now access tools like Shopify Balance, credit, capital, bill pay, and tax from a single dashboard with perks like fast funding, flexible repayment, and simplified taxes. This launch comes just before Black Friday and Cyber Monday, traditionally a peak period for retailers before the holiday season kicks in. Obviously, we're joined by Vikram here on the podcast, who is the absolute perfect person to ask about this. So, I mean, firstly, Vikram, congrats on the launch. I'm sure it's been a big slog for your team to kind of get to this point. What else can you tell our listeners about it and what it means for Shopify?
Thank you, Kate. Yeah, I'm really excited to talk about this because this has been, in some ways, years in the making. We started our journey in building financial services products for our merchants back in 2016. Actually, even further beyond with our payments product, and back in 2016 with our capital product. And we built a whole suite of products to help our merchants manage money, everything from business bank accounts to bill pay, to credit cards, to loans, to sales tax management. And with Shopify Finance, we're really excited to bring all of this together into a single place, built straight into the Shopify admin, where merchants are already running their business and they're in every day in and day out running their business. Now with Shopify Finance, they have a single dashboard where they can manage their money all in one place, right? Merchants can access the dashboard right from the admin and the mobile app, and they can see real-time insights about their business and their money. They can access all their financial accounts and their transactions in one single place. They can access tools like bill pay and sales tax to manage their vendors and manage their taxes. Again, we're really trying to help our merchants manage their money where they already make it on the Shopify platform. It has, again, it also brings all of our tools together, right? We have what we call Shopify Balance, which is a business account which helps merchants get paid fast on their sales on the Shopify store, earn high APY, move money, and all of that, right? So it's a business account. We have our credit card product, which helps merchants get up to 3% cash back on what they spend on, like marketing, B2B, wholesale, and things, shipping and things like that. Have the flexibility to pay it back over time, not just at the end of the month. We have a capital loans product, which helps merchants get loans, again, in preparation for BFCM right now. If you want a last minute loan, go to Shopify Capital and get a loan, right? Because we pre-qualify you, we tailor the offers based on business performance that we see on Shopify, and you can apply and get access to the funds in 2 days, right? Again, much, much faster than any traditional bank would do. We have a product called Bill Pay, which helps merchants manage all their bills and pay their vendors with any payment method of choice. For example, some small merchants can pay with a credit card, even if the vendor doesn't accept it, for example. And then we have sales tax, is the last product we have in the suite. Sales tax is extremely complex. In a place like US, there are 11,000 jurisdictions writing rules, and these rules always are changing. And it's really a pain for our merchants to manage this. So what we do is we really automate the whole thing. We help merchants understand when, in which regions they need to start collecting sales tax. We automatically calculate what they should collect, and we help them collect at the point of sale on each order. And we also help them set that money aside in our balance account so that that money is there when they have to remit it. So that's the whole suite of products that we have, and we're really excited to bring it all together and help our merchants manage their money within Shopify.
Yeah, I mean, it's such an awesome list, right, of like individual pieces of functionality. I suppose, what is the kind of key pain point that you're solving for customers by bringing it all together? Like, what's the main difference that you think your customers will experience by having this all in one place now?
I think the first thing is really a simplification, right? In the sense that we built a suite of products over a few years, and they were all in some ways different bets and different ways to access these different products. We are, first of all, really making it simple and unifying the whole experience, integrating these products to work much better with each other, right? I think that's the first thing. The second is just having access to real-time insights about your business as you are doing your commerce work, right? Just having a simple way to check your cash position can be really helpful when you're doing things like fulfilling orders on Shopify and realizing that, hey, actually the inventory on this product is running low. Maybe I should order more. You may want to say, I want to check quickly, hey, what is my cash position? And if I don't have enough cash, apply for that capital loan and then go and place your purchase order, right? So what we are trying to do is really embed these insights, embed this access to your cash insights, embed your access to financial tools within the commerce workflows as much as possible, right? I think those are a couple of things. And the other thing is convenience. Again, we're bringing this into the mobile app as well so that merchants can do a lot of our financial access and use our financial services products right in the mobile app, right? But I think if I step back from your question a little bit, Kate, like the whole reason we built Shopify Finance is to help break down the friction that our merchants face when they're dealing with traditional banks, right? If you think about it, a lot of our small businesses can't even get access to business banking and loans from banks, right? They need 2 years of history. 75% of SMB loan applications are rejected. 30% of our merchants don't even have a business bank account, right? So access is really hard. And even when they can access, there's tremendous amounts of friction, right? They have to file tons of paperwork, wait for weeks and months, for example, to get a loan. They have to give up personal guarantees and equity in their business to get a loan from some banks or some fintech players. So I think at the end of it, what we are trying to do is really provide access in a simple, convenient, flexible manner to these services. I think that's the core of what we're trying to do.
Yeah, no, absolutely. Felix, I'm guessing a lot of the things that Vikram is talking about probably sound kind of familiar to you. Obviously, I'm conscious that you guys don't just focus on e-commerce, but yeah, what's your take on what Shopify are doing?
Yeah, so I think, when you look at the dream of Moniepoint, just speaking from that perspective, the goal has been to make life easier for the businesses. So when you come onto Moniepoint platform, we want to make sure that the kind of frictions you get when you go to a traditional bank is not there, right? You have an easier process for opening accounts, an easier process for getting loans. So most of what Vikram is saying, they sound I can relate with it because every day we try to make life easier for our customers. It's the same idea, the same concept, making sure that the experiences of these customers, are improved. They get better, right? If there's a better way of doing things, there's no reason why we shouldn't do it that way, right? The fact that there's been known ways of doing it traditionally doesn't mean we can't explore other options. And that's what the likes of Shopify, the likes of Moniepoint, and other neobanks and e-commerce platforms or financial services platforms out there, that's what they're trying to do. And that's the reason why businesses, at least the more progressive businesses, find them appealing, right? So, yeah.
If I might just chime in and follow along with that, right? At the end of the day, both Felix and I are working to help a community of people, businesses that we have deep empathy and understanding of. And as a result, what we can do is really build these financial services in a way that makes real sense for that community. And actually, we can go further and really do things that no traditional bank or no traditional fintech that is working for a really broad segment can do, right? We can really tailor our offerings, really build for this community in some ways.
Spot on.
Kate, if I could just jump in to reinforce how exciting this kind of thing is. And it's obvious, I guess, certainly to this group and to this audience, but also worth reminding ourselves what we're getting by having so much more data available and the ability to analyze it. Because small business lending, small business finance has always been difficult. There's so much variation among businesses. Small and medium-sized businesses are a massive engine of economic growth and upward mobility opportunity, but they're also individually risky. Most of the young ones don't make it, over time. And so to keep these flows of capital coming into this section by getting better and better at understanding the risk, understanding the needs, being able to adjust for the seasonal flows and so on. It's just really an exciting and incredibly powerful new way of driving this kind of economic activity.
And Joanne, that is exactly right. Like if you look at what we do on Shopify, the smallest loan we offer is $200. And the largest loan we offer is $2 million. And it is really important for us to serve the smallest of our merchants. And we are able to do that as a platform because we understand and we see the merchants' business performance, and we see who is gaining traction and who needs the capital, right? And the most interesting thing is we do this without any external information. Like we do not ask merchants to give their personal credit scores, or we impact their personal credit scores in any way, or check those personal credit scores, because we have access to the data, which helps us really make these decisions based on business performance solely, right? And so it's really, really interesting on how we're doing this.
Yeah, I guess one thing I wanted to come back to you on, Joanne, is I thought Felix made a really interesting point around, like, for progressive businesses, there are now sort of progressive platforms that are emerging that are offering these types of solutions. I suppose when you kind of step back and you look at sort of small businesses as a whole, is there almost a risk that there's a bit of a split and that you end up with this sort of very high level of service and a lot of optionality for businesses that have kind of both the mindset but also kind of just the practical setup to be relevant to a Moniepoint or a Shopify? Is there a risk that kind of some of the other businesses that fit outside of that are just left behind, or do regulators have a role to kind of really try and avoid that?
I do think that risk exists. I would like to remind ourselves that we should always be asking ourselves when we think about innovation in finance, we should be asking the question, compared to what? And I think the traditional, TradFi situation has been even more skewed in the way that you're talking about, making it difficult to get access if you're on the smaller and less sophisticated side. But I do think that regulators should have these issues in mind, that what are the financial inclusion aspects for SMEs, and how do we make sure that there aren't regulatory obstacles that are exacerbating that type of split, and how do we try to empower and equip the industry to serve more people? And a lot of it, frankly, is just about being more forward-leaning on data and technology. Some of our regulators are very much that way and others less so. But looking at the upside as well as the downside. I don't know if I said this before. I'm a former bank regulator myself. I was deputy controller of the currency, and I love the regulators. But and I think they have a very hard job to do, but they do have a tendency to see a tech innovation, and their mind goes to what might be risky about this, and not so much to what might be good about this in terms of advancing the mission of having a thriving financial system. So, yeah, I think we should be mindful of that.
Yeah, no, absolutely. Okay, well, sadly, we're going to move on to our next story. I could happily talk about this like the entire show, but I think we're going to come to some of these themes again as we kind of go through the rest of the stories as well. So on to our next story. This one comes from TechCrunch, but again, covered in lots of different places. And that is Google and DPI back African fintech Moniepoint in $110 million round. The new funding bumps Moniepoint, who are shortlisted for the Alone Fest Award for Business Game Changer at next week's ceremony, valuation to over $1 billion, officially elevating it to unicorn status. Originally focused on banking infrastructure, Moniepoint now serves Nigerian small businesses, offering loans, business cards, accounting tools, and more. It's Nigeria's largest merchant acquirer, handling most POS, point of sale transactions, and processing $17 billion monthly. Moniepoint is expected to use the funding to expand across Africa, build out digital banking and business tools. It also recently entered personal banking and has been seeing rapid growth. Felix, no surprise, obviously going to come to you first in this. Firstly, congratulations on the raise. I'm sure it's been a really big shift for your team to kind of get to this point, so congratulations. I think what most people want to know straight out is, what you're going to do with the money. Hopefully like a couple of donuts or cakes at least, right? But once you've kind of celebrated, what are you going to do next?
Yeah, so when you asked what are you going to do with the money, I was tempted to say, hey, let's go buy something, an island somewhere. Or
Fine by me. I sign me up right now. Yeah.
just kidding though.
As long as you invite us.
Anyway, so yeah. Yeah, so first of all, the raise has been, for me personally, it's been surreal. Um, it's sort of validates the hard work that the Moniepoint team have been putting into the business for the past couple of years. Before the raise, we had the ambition to capture, you know, more of the market because there's still a lot of opportunities. There's still a lot of customers that are not on our platform yet that we would like to bring on board. So we are aiming to, push significant portion of the funds towards scaling of our services. Uh, like I mentioned initially, Moniepoint is meant to be a one-stop shop for businesses. Now, for us to achieve that, there are a lot of products that you have to build out for businesses so that when they sign up, they don't have to look anywhere else. Now, the resources required to build out that kind of product suite is quite significant. So, significant portion of the money will go into that. Still in connection to this, beyond capturing businesses in Nigeria, we want to expand into other geographical locations. And this is going to play a key role in making that a possibility. Just for context, we're building a cross-border payment product in addition to all the tools that Moniepoint promises our customers. Now, this cross-border payment product is to help open up Africa to the world. Now, most of the businesses in Africa participate a lot in imports and exports. So they need an easy way, a very smooth rail for settling payments and purchasing goods and services. So we want to make that possible. Now, if you remember when Vikram started and he was speaking towards how fintechs and financial service providers try to provide ease for the businesses, this is still in line with that. What we want to do is if you're a business owner and you're on our platform and you want to buy goods or services, or you want to get paid, you're selling goods and services, regardless of where your customers are, we should give you a platform that will make that extremely simple and easy for you to do. So these are some of the initiatives that we are looking at: scaling our businesses, capturing more of our customers, and expanding into other countries, which is still in line with capturing more of customers. Yeah, but these are the key initiatives.
Yeah, no, absolutely. And again, we have a global audience. There might be some people that know a lot about the sort of the African fintech scene, the Nigerian fintech scene, but probably some that maybe don't. So what are some of the particular challenges of scaling for you within your market that I guess, especially from a CTO perspective, you're probably losing a bit of sleep over?
Yeah, absolutely. So, every market would have their peculiarities, right? For the African market, and I will speak for Nigeria specifically because this is where we started. Yeah, there are certain things you have to be very mindful of. One would be the volatility of the macroeconomic situation of the country. So, for instance, as a company earning in Naira, your valuation is pegged to the dollar, which means when there is any form of depreciation of your currency in Naira, it affects your earnings. So it's a very critical situation because you could wake up tomorrow, let's say you're earning, say, $1 million in Naira. You could wake up tomorrow and you realize that your revenue has dropped by 30%. So instead of $1 million, you're earning $700,000. Do you understand? So, and these kind of things that you don't have control over are things you have to deal with on a daily basis, right? Now, for companies in this kind of situation, one of the easiest way, or one of the ways, it's not necessarily easy, one of the ways of solving it is to de-risk your business. And the risking here implies, expanding into other countries so that you're not tied to the fluctuations of a single economy, right? Now, the second thing you have to consider is the regulatory landscape, right? So regulators do the good work of trying to protect the customers, and you can't fault their perspective. But sometimes the kind of mandates or rules or regulations that come out could potentially harm your business. So it is necessary as a player within this market to be very conscious of the regulatory posture so that you can be in alignment with what they are thinking. And as you're building your product, you cater for some of their concerns. So you don't wake up tomorrow and then somebody's telling you to pack up because what you're doing is not acceptable, right? So this is another aspect. Now, the third aspect is some of the resources you need to execute the ideas you have are resources that might not necessarily be available within that ecosystem, which means you have to somehow import some of them. I'll give you a very simple example. Our infrastructure, for instance, runs on the cloud, and we have to pay in dollars, right? Which ties back to the original point I made. So because you're earning in Naira and you're spending in dollars, it becomes significant in some cases because the amount of money you have to convert from Naira to dollar to be able to pay your bills grows based on the nature of the economy. If the economy is depreciating, you have to spend more. In a good case where it is rising, then you're in a good position. So these are some of the things you have to be mindful of. They are not deal breakers. They are not impossible to handle, but you just have to be conscious of them so that while you're making your plans and projecting where you want to go tomorrow, planning for the future, you factor in some of these concerns so that you handle them accordingly.
Yeah, no, absolutely. Plenty enough to keep you busy, and I suspect to use up some of those investment dollars, right? So I'm not sure, sadly, there'll be enough left over for the island once you've fixed all of those things. Joanne, you mentioned at the beginning, obviously, that you've been doing some work. I've focused in on sort of African markets. What's your take on how the likes of Moniepoint are shaping the African fintech space?
Yeah, this is such a dynamic part of the world, Nigeria and West Africa, in terms of fintech. And the main project that we've been working on in Africa is focused on the consumer side and is looking at the rising problem of fraud and scams. And one thing we're finding, that people say until ships were invented, we didn't have shipwrecks. As we've seen the expansion of consumer financial markets and small business markets, in emerging markets, we are seeing also a rise in crimes that are riding on the back of those kinds of innovations. So we are doing a tech sprint, which is like a hackathon in West Africa, looking at how to counter consumer financial fraud and scam situations from a consumer protection lens. We're working with the Gates Foundation on it and some of the central banks in the region, and also the West Africa Monetary Institute, and looking at solutions between the public and private sector, better technology, ways of using AI is fueling a lot of the rising levels of fraud in the area, and AI is also part of the solution to it, finding the patterns and the bigger global patterns sometimes, and not just the local lowest rung of the ladder. So that's something is underway now, and we'll be producing results next year. And I did want to mention it because it's so important to have this thriving mass market of fintech services available. And we need to be sure that people, particularly as we bring in more people who maybe don't have a lot of history of using formal financial services, there can be an extra need for being really vigorous about protection from harm as people come into the system.
Yeah, no, absolutely. And yeah, Vikram wanted to give you a say as well. Obviously, overlaps between what Moniepoint does and kind of what Shopify is trying to do. What's your take on what Moniepoint has achieved to date?
I think it's quite impressive, so impressive. I'm inspired by what Moniepoint and Felix and team are doing in Africa. I grew up in India and still have family and business in India. And I think that some of the problems are very similar in terms of you being pegged to USD valuation and having to work in the local currency and things like that. So it's really exciting that folks like Felix and Moniepoint are serving this community. And going back to the earlier point I made, I think our businesses are built on this deep empathy and understanding of certain communities. So we are able to solve their unique problems much better than the giants in some ways. So that is exciting. I also want to touch upon the point around AI and what it can do for financial services. At Shopify is a technology company, right? It's first and foremost a technology company. And one of the things that we aim to do is we want to put our entrepreneurs and merchants at the cutting edge of technology at all times. And we will do that work so that you can rely on Shopify to be at that cutting edge of technology. And we've used ML and AI in building our products already, right? ML, we have tons of data, as Joanne talked about earlier, and ML models drive underwriting for us. And that's been the case for a while. But with AI, I think there's even more interesting things we could do with AI agents in financial services, right? But also at Shopify, we've been building this thing called an AI agent to help entrepreneurs have an advisor as they're moving through their business and optimizing their business and their commerce journey. And there's some very interesting things we can do in helping small businesses and entrepreneurs have that advisor who can help them optimize their money, optimize their business. So I'm very excited about this technology space in general.
Yeah, absolutely. It's absolutely huge. Well, I mean, again, massive congrats, Felix, the whole team on the raise, and really, really excited to see kind of the next steps you guys take. I mean, just an incredible growth journey to date, and I'm sure there's just a ton more to come. So kudos. On that note, we're just going to take a very quick pause. We'll be back shortly.
Whether you're starting or scaling your company's security program, demonstrating top-notch security practices and establishing trust is more important than ever. Vanta automates compliance for ISO 27001, SOC 2, GDPR, and more, saving you time and money while helping you build customer trust. Plus, you can streamline security reviews by automating questionnaires and demonstrating your security posture with a customer-facing trust center, all powered by Vanta AI. Over 7,000 global companies like Atlassian, Flow Health, and Quora use Vanta to manage risk and prove security in real time. Our audience gets a special offer of $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.
Ryan Reynolds here for, I guess, my 100th Mint commercial. No, don't. I mean, honestly, when I started this, I thought I only have to do like 4 of these. I mean, it's unlimited premium wireless for $15 a month. How are there still people paying 2 or 3 times that much? I'm sorry, I shouldn't be victim blaming here. Give it a try at mintmobile.com/save. Whenever you're ready.
$45 upfront payment equivalent to $15 per month. New customers on first 3-month plan only. Taxes and fees extra. Speed slower above 40 gigabytes. See details.
Welcome back. Before we dive into the rest of the show, we want to tell you about a little meetup we're having in London later this month. We've teamed up with our friends at 11 Pulse for a special product edition of our open mic night. This is your chance to grab a mic and tell us what we should be paying attention to in the world of financial services. It's all going down in Shoreditch in London on Thursday, the 14th of November. Sign up right now via the link in the podcast description. Right, back to the news. Our next story also comes from payments, again, covered in many places, and that is JP Morgan's Jamie Dimon says banks must fight back against regulators. JP Morgan Chase CEO Jamie Dimon vowed to oppose those he said would not make banks safer. He criticised what he called overlapping or ill-conceived rules on capital requirements, card payments and open banking. It's time to fight back. Many banks are afraid to fight with their regulators because they would just come and punish you more, he added. The specific regulations he wants to fight are new open banking banking rules, saying he was not against open banking, but noted that it would compromise consumer data and lead to fraudulent money transfers. The Basel Committee banking supervision rules, ordering a surcharge of 9% capital, which he called stupid, ridiculous, and inconsistent. Plans to allow card issuing financial services firms to charge more for debit card transactions, as banks are limited in how much they can charge for debit cards, while card issuers have no such limits. Joanne, I feel like it logically makes sense to come to you first. Are you worried? Should the regulators be worried about Jamie Dimon fighting back?
So we have embarked on massive change in how we do financial regulation. And we're going to be on this journey for a long time, and it's going to involve plenty of fighting. And also, I hope, a rising level of collaboration between the industry and the regulators. There is definitely an appetite for litigation on the bank side and the financial industry side of some of these issues. The U.S. open banking rule just came out within the last 10 days or so. And I just recently spoke at Money 2020 in Las Vegas in the United States, where the head of the Consumer Financial Protection Bureau, the CFPB, Rohit Chopra, had fighting words as well for the industry folks who were talking about litigating the open banking rule. So I expect we'll be in some turbulent times. There is an elephant in the room on this topic in the U.S., which is we're on the eve of a presidential election, and it is likely to bring either a lot of change or else less radical, but nevertheless clear change in policy. If Donald Trump wins the election, some of the current regulators will be replaced quickly, including the head of the CFPB, who is now serving basically at the will of the president. The controller of the currency, the national bank regulator, is also currently served by an acting person, Michael Hsu, and could be changed very quickly. And the others would probably be changing, over time, maybe not quite instantly. So that would bring an era that would probably have a generally lower level of regulation. If Kamala Harris wins the election, she is perceived to be likely to be more forward-leaning on technology than perhaps the Biden administration has been, and open to a lot of thinking on how to go forward. I've been saying to people who ask me, not that there's a reason to ask me about new leadership, and I've been saying if I were the president of the United States incoming and choosing new agency heads in every area, I would be saying choose people who are tech forward, or at least not tech backward. Don't have agency heads that are clueless about technology change, because they're going to have to do things that are different, and they're going to have to do them in different ways. And again, I think we're embarked on a big journey of changing that. If I could say one more quick thing, I know I'm talking a lot here. Jamie Dimon has a job to do, and he framed his comment around we shouldn't be doing regulatory things that aren't good for banks. And the regulators would be mindful of not doing things that are going to harm banks. But their frame is we need to do things that are good for the public, for the banking consumer and the financial system as a whole. And that is way more than banks today, even though some of these regulators are specifically bank regulators.
Yeah, no, that makes sense. Vikram, keen to get your perspective. How much time do you have to spend in your role kind of thinking about regulation? I'm assuming quite a lot, but how much is it influencing what you're building at Shopify and kind of how you're stretching yourself, like the types of functionality that you're kind of considering building and releasing?
Yeah, I mean, we are building products in a fairly regulated space. So obviously we spend a ton of energy to making sure we are being compliant. We are building compliant products, number one, and making sure we are protecting Shopify and the Shopify brand, as well as the Shopify business as we do this. And the way we have operated largely is we work with partners. I mean, Shopify is not a bank, right? So we work with a bunch of partners. And we want to make sure, like from everywhere from, we work with Stripe and Evolve and Celtic and Fifth Third banks to build our business account and cards products. We work with WebBank to build our capital product in the US, and so many different partners across the world. And one of the things we want to make sure is we never want to get the partner in a difficult spot. And this, we work very close with our partners on our compliance programs. We work with them very closely when we are building new products. One of the interesting things is when we have new products, we tend to be creative. We want to actually do things specifically for our segment, and we want to figure out new ways to doing this. And we've been able to do this by very close collaboration between our teams and our partner teams, bringing them along that journey of what is the problem we are trying to solve and what is the solution we can design within the guardrails of the compliance requirements to solve that problem. And that has really, really served us well as we build new products and build some creativity and innovation into these new products.
Yeah, no, absolutely. Felix, it'd be great to get your perspective as well. Obviously, you guys are a bank, are regulated, I understand, by the Central Bank of Nigeria. So does any of what Jamie Dimon says resonate with frustrations you guys have? I mean, I'm not expecting you to kind of like completely slam your regulator. I'm guessing that's probably not in your interest, but like what is the kind of the regulatory setup in Nigeria, and how are you guys interacting with that?
So the way we look at it, I think when you understand the perspective of the regulators, you are able to empathize with them. And it influences the way you interact with them, right? So, the regulators are trying to protect the public, the customers. Some of the rules they come up with, they're bringing rules that, try to put the businesses in check so that the customers can get the best value from interacting with these businesses. So when you look at it from that perspective, and understand that they are not out to harm you or the business. They're just trying to protect the customers. You more or less take the position of more of collaboration. You try to understand what's the influence behind the rule, the regulation. Why are they trying to create this what kind of problem are they trying to solve? And if you think the rule is going to harm your business, you can always bring them to the table and communicate your concerns and say, hey, I think I understand the problem you're trying to solve, but there's a perspective you're missing, because they would have blind spots, obviously. So you will help them see those blind spots and say, these are the perspectives you're missing. And if possible, you can come up with a different idea or a middle ground that can solve the same problem they are trying to solve without harming the business. And most times they listen, right? Because their interest is not to harm the businesses, it's to protect the customers. So that's typically the posture we take when interacting with the regulators, because we know fundamentally what is driving the rules that they come up with. So it's not for me, it's not a war where I have to win, I have to defeat you. No, it's more of, let's have a conversation. Let's understand each other's perspectives. And then let's come up with something that will work for everyone. Something that will make the markets thrive, where the customers will be happy, get more values, and the business owners will be happy, get value for their efforts. And that typically works.
Yeah, no, that sounds very sensible. Go for it.
Just note, I think the Central Bank of Nigeria has a great reputation for trying to understand and figure out how best to deal with new technology. Again, as we said before, Nigeria is a great incubator of fintech innovation and so on. And CBN has been really far-thinking.
It's nice to shout out regulators as well as sometimes give them a little bit more criticism as well. So
I could shout out some of the U.S. regulators too. By the way, I certainly don't mean to suggest that the people we have now are not forward-leaning. They all are. They're all trying to figure out how do we do better with getting our arms around the market. Think about how the space has changed in, say, a decade, where it used to be easy for bank regulators to think about banks, and fintech was marginal, and so was e-commerce in terms of uh, touching the banking system and what the consumer expected and so on. And today, the innovating edge of finance has changed mainstream finance so much that the regulators of those older mainstream institutions are really rapidly trying to figure out, how do we get the whole thing right in a holistic way and not just for the piece of it that I'm supposed to be looking at.
Yeah, no, it's a massive challenge for sure. And one, yeah, as you say, that regulators around the world are trying to grapple with. So absolutely. Okay, I've got to move on to our next story. This story also comes from payments. I feel like give a lot of shout out to payments this week. Lots of other publications available as well. This story is Marqeta to embed buy now, pay later in payment apps and digital wallets. The new Marqeta Flex is being developed with payment providers Klarna and Affirm and payments platform Branch. Marqeta Flex is designed to expand the distribution of buy now, pay later (BNPL) and provide these options to consumers when they need them. For consumers, the solution will represent personalized BNPL options inside the payment apps they use. It will also allow payments providers to offer BNPL solutions to access more consumers and card issuers and digital wallets to access a variety of global buy now, pay later providers through a single integration with Marqeta Flex. To find out more, we spoke to the VP of Bank and Network Partnerships at Marqeta.
Greetings, FinTech Insiders. This is Lisa Roboski from the modern card issuer Marqeta. I'm coming to you live from the last day of an action-packed Money 2020. This week, we revealed Marqeta Flex, an industry-first buy now, pay later solution that can be embedded into payment apps. We are very excited to help Branch. Branch is the company that powers the financial lives for approximately 2 million gig workers. Gig workers tend to have irregular payment schedules and are more likely to need alternative financing solutions. Marqeta Flex is the answer. Marqeta Flex is a product solution that enables an embedded marketplace experience between app providers like Branch to serve up BNPL offers from our industry-leading customers, Klarna and Affirm. By bringing these three incredible companies together, we will enhance the customer experience by availing new financing options, minimizing customer declines. This will drive more stickinesses to Branch's app, given the embedded nature of the offering, while also driving new revenue opportunities for Klarna and Affirm. By providing real-time competition for buy now, pay later providers, it will also allow consumers to win through lower and no-cost BNPL financing solutions. This means they can make bigger purchases or simply help them get through volatile payment cycles. FinTech Insiders, stay tuned for us to announce more exciting products and expanded partnerships that will take advantage of Marqeta Flex and other Marqeta unified platform capabilities.
Vikram, I'll come to you first on this one. Obviously, you spoke when you were talking about what you're doing at Shopify about simplifying things, bringing things all together into one platform. It kind of sounds a little bit like Marqeta trying to do something semi-similar. What's your take?
Yeah, specifically to what they're talking about with the Flex launch, I think it's quite exciting. At Shopify, we've had BNPL integrated into our payment flows for a while. I'm in the US, we work with Affirm for that. And it's a big boost to conversion in e-commerce. I think this is consistent with everybody that has integrated BNPL into their offerings. And we allow buyers to buy from our merchants and pay over time. And that's something that's been in market for a while. And it's exciting that more players are doing this. On the business side, for our merchants, we're also been trying to integrate buy now, pay later into our products to help merchants pay for their expenses over time. And the best example I can talk to you about is our credit card. The way our credit card works is it's not a traditional revolving credit card. It's a more interesting thing where merchants can use our credit card, spend on daily purchases, from everything from ads on Meta to buying shipping labels and things like that. They earn cash back and all of that is great. At the end of the month, they can choose to pay off the credit card in full if they have the cash. But e-commerce merchants always face the vagaries of cash flows. And so if they don't have the cash flow, they can choose to pay that credit bill over time. And the way that pay over time works is they can pay a small percent from their daily sales to pay off that credit card over 10 months. So this is a very unique flex option that we have built into our credit card. And it's great, actually, because at the end of the day, our SMBs face these vagaries of cash flow. There's quite a bit of seasonality in their business. They have to buy things that won't sell for a while. And all of these solutions, like what Marqeta announced and what we are doing, is great to create more flexibility for SMBs to manage their cash flow.
Yeah, for sure. Joanne, what's your take on this announcement? Is this a great addition to the options for customers, or is there anything you're concerned about?
I think, yeah, it's great to see the innovation underway in the NPL. And I am bringing the regulatory lens again to the topic. Regulators have a love-hate relationship with credit and credit-like products. On the one hand, they want to be sure everybody has fair access with no bias and can get the credit they need to do the things they need to do in their lives. On the other hand, they worry about people getting more credit than they can handle, going into debt, being caught up in poor decision-making, impulse buying, and so on. And we're seeing a proliferation of new kinds of solutions to these kinds of problems, short-term liquidity for the consumer and or the ability to pay for a large purchase. And much of it is not being regulated as credit per se. We're seeing the same thing with earned wage access products as well. So I expect to see a lot of policy discussion emerging in this new space, but my view is that it's overall directionally valuable. It's bringing a lot more possibilities, a lot more choices, again, a lot better ways of evaluating risk for the lender and maybe helping the borrower make good choices on risk as well.
Yeah, I think it's I'm interested to kind of see just technically how it's executed and kind of what these journeys look like for consumers. Obviously, Branch is kind of really focused on sort of earned wage access, has that as kind of a key part of their offering, and as you say, it has sort of many useful applications. I suppose the thing that I worry about from a consumer perspective is, as we end up with this sort of diversification of different types of credit, can consumers end up with lots of different credit lines without necessarily really realizing? How do you help a customer to understand, when the money comes in at the start of the month or the start of the week or on a daily basis, whatever their kind of personal cash flow situation is, like what are their true outgoings? What needs to go out in what order? What is the prioritization there? I think we're kind of entering this world where consumers, small businesses, medium businesses have so much mental load about how they kind of think about money because of some of these new credit options that are coming into the market. So yeah, obviously opportunities on one hand, but go for it.
So I have the answer to that. I hope, possibly. I'm being partially facetious, but not completely. So I think the answer to that is that we will let our robots help us with that. We're going to need AI tools to help us figure out how to manage these complex situations in our financial lives. And there are a lot of people working on those kinds of challenges. But people say that finance is too complicated for AI, but my answer to that is it's too complicated for humans also. And if we work together with the AI, we may be able to come out with something better.
Yeah, absolutely. Felix, keen to kind of give you a say as well. Obviously you guys offer a variety of different credit products across like your business side and your personal banking side as well. Where does buy now, pay later fit into that at all? Like, what's your take?
Yeah, so for us, the focus is mainly towards the businesses. For us, when I was trying to explain what Moniepoint does, it's you can summarize it as providing ease to the customers. We want the businesses to be able to do their businesses, in the most effective way possible, seamlessly, without worrying about, a lot of things that we'll take care of. Now, bringing that to credit, the way we've thought about it has been in a case where, as a business, you're trying to purchase some goods, right? As Vikram mentioned earlier, the nature of the cash flows for these businesses can be unpredictable. but we want to be there for you as your bank to say, if you need to purchase these goods, don't worry. We will make the credit available to you. Then you can pay back based on our agreement. Typically, the agreement is to take the money from your transactions, your daily transactions. We deduct, parts of the value from those transactions. So you get to pay back without feeling the impact of taking that credit. So, and that has been the model for us. Now, considering the fact that we're now expanding into the cross-border domain, it's going to be a critical component because at this point, you're dealing with merchants in other parts of the world that you want to purchase goods from. And there could be several reasons why you can't make that payment at the point when you need the goods, and you need to meet your obligations. So as your bank, we want to make it easy for you to, take out this credit, buy what you need to buy. And since we have a history of your transactions, it's easy for us to recover the money. And if I go by the experience we've had so far, giving credit to our customers, I believe that relationship is quite symbiotic. It's the kind of relationship that the businesses love because it gives them convenience. And at the same time, they don't feel the impact of you taking back the money because you take it in tiny tranches that they don't feel at all. So, yeah. Now, we haven't rolled out this for retail customers, but it's something we would also consider down the line.
Vikram, did you want to add anything? Yeah. I think have to be the last point, but you go for it.
Okay, if I could jump in on Felix's point is, at the end of the day, at least for the SMB world, more access to credit is, I think, a great thing, right? And how merchants manage that credit, I think there's a bunch of ways we can help merchants, help SMBs manage that credit through smart automation plus control, right? And what Felix is talking about in terms of taking a small portion of your daily sales or daily transactions is one way to automate so that you don't have to worry about paying your bill at the end of the month. And this works beautifully for us as well. We do the same thing for our capital loans product as well as our credit card product that I mentioned, where the pay over time is as a % of daily sales. But at the end of the day, you also want SMBs to have control so that they can make choices that are different from the automation. For example, merchants can choose, in our case, merchants can choose to pay off a loan at a certain faster so that they can save on costs. Absolutely. But I think this is what more access to credit, I think, is a good thing for SMBs. And it's a great problem to have to help them figure out how to manage that credit. And we can do that with good UX, automation, AI, and everything.
Yeah, fingers crossed. Okay, well, yeah, best of luck to Marqeta with the launch, and yeah, intrigued to see kind of how this plays out in terms of the journeys that end up in customers' hands. Okay, now for a quick look at another news story this week that we sadly don't have time to cover in full. This one comes from Fintech Alliance. That is, Revolut launches new Rev-Women in Engineering grant, offering up to £5,000 to support top talent. The programme aims to boost gender diversity in tech with career coaching, mentoring and access to the Rev-Women community. Revolut's UK CEO and friend of the show, Francesca Carlisi, has emphasised Revolut's commitment to bringing more women into traditionally male-dominated STEM fields. Applicants will get hands-on career support through Revolut's Rev-Women network, tackling the gender gap in tech and engineering. This grant is open to individuals who identify as women studying STEM subjects across select European countries. Always great to see anything kind of coming out that will try to address sort of the gender imbalance we see within fintech and within kind of STEM elements of the industry specifically. I think, obviously this will have a benefit for Revolut as well. Hopefully it'll help them to really kind of cut through to some of that talent, to kind of really get access to the best talent if given they're providing this financial support. It's not kind of like as I understand it, it's not just sort of like a straight handout. You have to actually complete the internship and pass the internship and kind of get an offer to join their full graduate program. So you do have to kind of work for the money, but they've got a sort of a solid internship program as it is. So fingers crossed, if you're listening to this and you kind of tick those boxes and you're interested in a career in sort of an engineering discipline and within the world of fintech more broadly, then definitely one to check out. Okay, and finally, a look at something a bit more lighthearted. As we are recording this episode on Halloween, I'm not sure if I've had any ambient trick-or-treat doorbell rings whilst we've been recording this. But we've decided to test our panel's knowledge with a quick quiz on the spookiest aspects of financial services. I'm going to read out the questions, and the first person to shout out the answer wins the point. We'll see how this works. We can adapt the strategy as we go if it needs to adapt. If you want to play along at home, hit pause and grab a pen and paper so you can keep track of your score. And please do tell us how you got on social media. Right, panel. Are you ready? I'm hoping everyone there's no cheating going. I'm gonna be watching. I can see people as we're recording this. I'll see if anyone's like doing any quick like typing or browsing. Question number 1. What is the fear of money called? Is it A, bankophobia, B, greediversophobia, C, monotophobia, or D, chromatophobia?
C.
I'm going to go with D just by process of elimination because the others sound too obvious. Not obvious, but awkward.
Ding. I mean, I'm hoping that in the post-production they have it. That's correct. Yeah, I'm assuming in the post-production they'll have some actual like proper noises they can overlay so I don't sound like a complete muppet. But yeah, the correct answer is D, chromatophobia. Question number 2. Which of the following was a real, but now sadly no longer with us, life insurance fintech? Is it A, Eternal Ease, B, Rest Assured, C, Dead Happy, or D, Final Smile?
B.
It's not going well. Not going well so far. Who wants to, so it's not B. Who's got the next guess?
A.
No. Vikram, you've got it's just like who wants to,
Is that
50-50 chance.
Yeah, let me go with C.
Yay, Dead Happy. I'm really sad I actually genuinely didn't realise they'd stopped trading. Oh, they used to do some really great advertising campaigns. I'm sad now.
What a name.
Question number 3. According to research from Finder, how much in total will Americans spend on pumpkins this year? Is it A, $250 million, B, $500 million, C, $750 million, or D, $1 billion?
I'm going to say it's toward the high end. So it's either C or D. I'll go with C.
Hey, that's correct. That's a lot of pumpkins. Blimey.
It's crazy. Yeah.
I also didn't like, is that just the cost of the pumpkins? Or because there seems to be like a whole like, extra like industry around the pumpkins, like pumpkin picking, where you have to go and you have to take your children and they have to wear elaborate costumes and go on fairground rides and all sorts of things that confuse me immensely.
I assume it excludes pumpkin spice latte, but that would like double it probably. So
there's probably still time to push the number up to $1 billion, at least on the west coast of the US.
Yeah. And question number 4. UK citizens have been warned they might be hit with a £5,000 fine if they do which of the following on Halloween? A, throw toilet roll over a house that fails to give them a treat. B, drive in their Halloween costume. C, carve a swear word into a pumpkin. Or D, post a TikTok of them jump scaring random members of the public without their permission.
Kate, did you write these? These are so imaginative.
I did not write these. I did not have any imagination at all. I did not write these. No. Luckily, there's people in the team that do have imagination. Who's going to have the first guess?
Just a guess. Let's say a D.
It's not going well for you today, Felix. I'm so sorry. You've used up all your good luck on the raise. I'm sorry. Okay, so it's not D.
I'm going to say it should be. Yeah, go ahead.
Joanne says B. What does Felix? What does Vikram say?
No, I'm saying it should be A. That's the one that I would be in favor of, but that doesn't mean I'm voting for that.
Right. Okay, sorry. So is anyone going to pick an option or?
I can't remember the options. Sorry.
Toilet roll, driving in a Halloween costume, swearing via pumpkins.
I'd say A.
No, it's not going.
What?
B
are
or
we
C?
down to B?
B or C? Is it B or C?
B or C. I'm going to say B.
Hooray. I think, Jan, yeah, well done, Jan. Yeah, driving in Halloween costumes. I've not seen this news story. I assume it's maybe, I don't know, like, could it impede your driving if it's, like, too big? I don't know.
If you have, like, a whole
it does depend on the costume, doesn't it? Yeah. And our final question, why did Brazilian Erica de Souza Vieira make headlines? And I do remember we covered this story on Fintech Insider, so I actually did know the answer to this one already. Why did they make headlines earlier this year? A, she wheeled a corpse into a local bank to try and sign off a bank loan. B, she sued her bank after being bitten by a spider in her local branch. C, she left her multi-million-dollar estate to her black cat, Salem. Or D, she held up her local bank branch wearing a Donald Trump mask she previously wore as a Halloween costume.
Hey.
Actually, you've got it right for once, Felix. It is number 8. Yay! End on a high. Yeah, no, I remember that. Yeah, she did. She took a dead body into a bank to try and get a loan.
I heard the story.
Yeah.
Yikes.
Things. I mean, yeah.
I assume she had her application denied.
I can't actually remember. I assume so, but we've got to take the friction out of getting people access to credit. So, this is what it's driving people to do. I think probably not a surprise, but I think Joe, you won that one. I think you got the most right answers. So, but you're all winners, really. You're all winners. Absolutely.
Wonderful.
That wraps up this week's FinTech Insider News. Thank you so much to today's guests. It's been great to talk to you all and learn about what you're up to. Where can people find out a bit more about you and your companies? Vikram.
Go to shopify.com/finance. And if you're a Shopify merchant, just log into your Shopify admin and see what Shopify Finance has an offer for you.
Awesome. Felix?
Just go to moniepoint.com and you'll see what the things we are up to.
Brilliant. And Joanne, what about you?
We are at regulationinnovation.org.
Awesome. And as for me, I don't have a website, but you can drop me an email, kate@learnfirst.com, or find me on LinkedIn, Kate Moody. Thanks very much for listening. If you like what you've heard, please follow our podcast. And if you really want to help us make a better show, you can do so by filling in our listener survey right now at learnfirst.com/survey. And if you're listening on Spotify, you can now drop us a comment and tell us what you thought of the show. As always, if you want to join the conversation, find us on social media. Just search for Learn First or FinTech Insider or email podcasts@learnfirst.com. We also, very excitingly, have a brand new WhatsApp community channel where you can get the inside track on all of our content. You can get involved via the link in the description below. Thank you very much. Goodbye.
Whether you're starting or scaling your company's security program, demonstrating top-notch security practices and establishing trust is more important than ever. Vanta automates compliance for ISO 27001, SOC 2, GDPR, and more, saving you time and money while helping you build customer trust. Plus, you can streamline security reviews by automating questionnaires and demonstrating your security posture with a customer-facing trust center, all powered by Vanta AI. Over 7,000 global companies like Atlassian, Flow Health, and Quora use Vanta to manage risk and prove security in real time. Our audience gets a special offer of $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.